Yesterday, we got the first rate cut in 4 years from the RBA, down 0.25% to 4.1%, as inflation has eased from more than 6% to 3.2% underlying. But the bank also stressed it won't ease as aggressively as the markets anticipate, and also flags significant but as yet unquantifiable geopolitical and policy uncertainties globally. But it anticipates the trimmed mean gauge will stay at 2.7% through to June 2027, meaning it will fail to reach the midpoint of the target. And Bullock was firm. 2.5% is still the midpoint target, even if they move around it. The media seemed almost overjubilant at the cut, talking of massive relief for households, with the much recited data from CanStar showing that $1 million mortgage would be $154 a month cheaper in interest payments. Remember, most Australian mortgages fluctuate with the RBA rate, unlike in the US, where many people have fixed rate loans. And sure, every little certainly helps, but as Bullock conceded, really, the cut in real cash terms was small beer, even if symbolically it was important to the bank. Certainly, by stressing that settings are still breaking the economy, Bullock did sort of leave room for additional trims ahead sometime. Politicians were quick to see any opportunity to spruik, and in a press conference in Canberra, Treasurer Jim Chalmers said that the rate cut was the soft landing that we've been planning for and offers a relief that Australians need and deserve. Bullock distanced herself and the board from politics, but I suspect they were all too aware of the political currents. And the recent JWS opinion poll shows that costs of living and housing have been among the top concerns for the electorate, as I discussed yesterday with Leith van Onselen in my live show. Unlike the RBA, the Treasurer didn't declare victory in the fight against inflation, showing the central bank's concerns about the uncertain economic outlook going forwards. While low unemployment supports demand, a monetary fiscal split is actually complicating the RBA's efforts to tame inflation. Government spending at both state and federal levels remains strong and is expected to rise further in the election year, which all sounds pretty inflationary to me. Forget the media hype. There is a long, slow road for households mortgaged up to the hilt, and very little here to reignite the fuse on the housing market, at least for now.